Welcome, ladies and gentlemen, to realestateinvestormba.com. At Real Estate Investor MBA, we strive to provide valuable information from various experts within the business and real estate community, covering real-time market and economic information as well as curriculum-level material within various real estate investing niches. We aim to be relevant, straightforward, and forthcoming with actionable information for our community. And here's your hosts, Tejas Gosai and Jeremy Moyer.
Hello, ladies and gentlemen. Welcome back to Real Estate Investor MBA. I'm your co-host, Tejas Gosai, and I have my partner, Jeremy Moyer, next to me. We spent a lot of time and energy on this podcast, and we'd love for you to check everything out online. We're on Facebook, Instagram, and soon to be on iTunes. With that, we have a super awesome show today that is the precursor to a 1031 event that we are having this Friday. With that, I'll turn it over to Jeremy, and let's introduce our guests.
Great. Thanks so much, Tejas. As Tejas said, we're super excited to have Tina Pashovich on. She is an Eastern Agency representative based in Philadelphia area. She joined the Old Republic Exchange after a 30-year career in education. Tina is a proud Ohio State Buckeye graduate where she earned both a bachelor's and master's degree in education. Her educating and training background experience with establishing and maintaining relationships with the community partners and managing skills are very valuable tools in providing her clients with a comprehensive 1031 exchange transaction. Tina's approach to the 1031 exchange is to provide the clients with their personal service and connection to ensure a successful exchange process. In her spare time, Tina enjoys playing tennis, travel, and trivia. Welcome, Tina. Can you tell us a little bit more about yourself and how you came into this position at Old Republic?
Absolutely. Well, thank you for having me. It's a very exciting opportunity, and I love what you guys are doing. Again, my name is Tina Pashovich, and I am the Eastern Agency representative for Old Republic Exchange. We are a direct subsidiary of Old Republic Title, so part of the Old Republic family. But all we do are the 1031 exchanges. That's our specialty. So again, I was in the education business for 30 years. I retired a few years ago and moved to the Philadelphia area from Columbus, Ohio. So sorry, Penn State fans, I am an Ohio State Buckeye, but always rooting for the Big Ten. So I started a few years ago with Old Republic Exchange. Again, one of the main focuses of my position is to educate our customers on what a 1031 exchange is and how it can benefit the real estate investor.
Great, thank you. Can you just give a high overview of what a 1031 is, if our listeners don't know what that is?
Sure. So the IRS Code 1031 allows a taxpayer who is selling an investment property, any type of real property, it allows you to exchange for another investment property and defer your capital gains tax. So there are substantial advantages to deferring that tax. For example, if I'm selling a property for $100,000, rather than selling it in a standard purchase and sale and paying an exorbitant amount of capital gains tax, I can leverage those dollars into another property. So that allows the investor to purchase a property, perhaps more expensive property or multiple properties. So it's an excellent wealth building tool.
It's an amazing tool that investors, I don't think everybody knows about it, but they could definitely take advantage of it.
I agree. And I think once you do learn about them, I always like to say the 1031 exchange is a real estate investor's best friend.
So Tina, I obviously am in the real estate world here in the Lehigh Valley, and I've known about 1031 exchanges since my days in law school, but it is very kind of odd to me that every day there are seasoned investors, I mean, some that own sometimes millions of dollars in property that have never even heard of a like-kind exchange or how to use this or anything like that. So Is it just that it's a niche that people don't know, or why don't people know about this?
It's fascinating to me as well. I come across many people who have never heard of it until they've heard me speak. So again, I try to educate. I speak with realtors, I speak with tax advisors, CPAs, accountants, etc., just to educate. So I think, aligning yourself with a great CPA is a good start for a real estate investor.
For sure. And then there's also the rest of the team that you need as well for what you're doing. So education-wise, we are putting on this event. Here it is. Let me get that to be a little bit bigger. And it is going to be this Friday. This is a very detailed event on how to 1031 exchange real estate in the Lehigh Valley. We're limited to 100 folks. We already have about 15 registered. This is open to real estate agents, investors trying to learn about this stuff, so on and so forth. And one of the reasons that we're doing this is because we did launch a private equity fund, and a lot of this has to do with the legacy of what happens in your future in the real estate world. So we're going to bring on a couple other guests. This is our first time having multiple people on the program, so it's a lot of excitement. But we have Jeff Sella and also John Levine. And Jeremy, you want to give them a quick intro?
Sure, absolutely. So Jeff and John are both well seasoned within the real estate and banking world. Jeff Sella, he's a co-manager of the new Lehigh Valley Private Equity Fund and brings a vast knowledge and experience within banking and lending. And John, he's the chief investment officer with Lehigh Valley Private Equity Fund. And John has a vast knowledge within real estate and helping companies grow their portfolios. Welcome, guys.
Thank you. So Jeff, do you mind going first and kind of just explaining how 1031s have helped your clients, some of the people that you've been working with for the past few years?
Yeah, 1031s are a great vehicle. And as Tina was explaining, that tax advantage is tremendous. And so that's something that every investor should consider whenever they are looking at making a real estate investment. Do they have something that they can sell and convert into a 1031? Timing is a quick issue too for people. You got to be able to do it quickly. You've only got 60 days, I believe, is the timing and window you've got to work with to move from one property to the next. But it's a great vehicle, and we've had a number of people take advantage of that. So I highly recommend looking into it.
And if I could interject on the timing.
Sure.
Sure. So you have from the close of your relinquished property, you have 45 days to identify a replacement property and a total of 180 days to close on that property.
There you go. Good. John?
Yeah. Hey, John, can you talk about some of your history in the real estate investment trust world, in the finance world, and how, you're a senior executive, so you've kind of seen the 1031 vehicle in many different ways over the past 20, 30 years.
Yeah, well, I mean, it's a very interesting, has a long history. I've known about 1031 exchanges for a very long time. And interesting enough, obviously, it drives activity. So someone who has entered into a 1031 exchange by selling a property needs to buy other properties. So on that front, you can see, and I've seen many 1031 exchanges around the 180-day time that people will rush to go buy assets because they need to close that transaction. So, as far as the fund world and my activity in it, taken just many years of doing very detailed procedure-based work and applying it to the kinds of assets that we will invest in, whether it be certain mortgages or buys and holds or opportunistic deals that we can do as the fund. Pages?
It's awesome. Yeah, so, a bit of this whole discussion, it's a little bit of a teaser too, to say if you don't know about 1031s, look it up real quick. If you do know about them, there might be some things that you're not taking advantage of. laws and regulations are changing all the time. So to have somebody like Tina, who has a constant connection, then can cut our time in, learning and moving the next pieces. But Tina, can you talk about some of the clientele that you work with, maybe some of the specific asset classes and things like that you have helped trade, things like that?
Sure. So I think one of the misnomers about the 1031 exchange, sometimes when you hear of a tax incentive, you're thinking it's the top 1% or the wealthy real estate investor. And certainly the wealthy real estate investor is very involved in the 1031 process. But actually, it's 1031 exchanges are great for taxpayers at all levels. In fact, 1/3 of all exchanges are for properties less than $500,000.
Really?
Yes.
I would have never guessed that, because in your head it's always, $10 million property or
exactly. No, I think, and that's, I think, another reason why a lot of people aren't aware of them, because they think of a tax incentive. Well, I must not apply to me. So again, taxpayers at all levels, residential properties as well as commercial properties.
Okay, unpacking that. So I'm doing this as an example, right? So if I own a 4-unit and it's a residential, I can only buy another 4-unit residential or something residential with cash flow.
That's incorrect, and that's a great question. So it's just any type of real property, like-kind real property, and that's a very broad and liberal definition. So it could be a vacant plot of land, it could be a hotel, it could be a farm, it could be a single-family residence. You could exchange that for commercial property. So, and it works both ways.
So, John and Jeff, let's talk about how in the fund world too, or just the banking world, how this helps in, let's just say, a person's like legacy investing and future investments and things like that. Jeff, when I think of trading up, when I think of 1031s, can you explain how that specifically works with some of your clientele that are fixing and flipping properties over and over and over and moving into kind of different plays?
Yeah, so typically we see it used when you have somebody who is acquiring a single family homes, and then they want to step up to larger properties. So they take a group of single family homes, maybe 10, 20, 30 of them, and they sell those and roll that gain into a much bigger property, even a commercial property in some cases. So it's kind of like playing Monopoly. You cash the houses in for the red hotels. But the 1031 is a great vehicle to allow that to happen, because you're just deferring that tax. And that's a huge part of the amount of money the investor has to put into the next deal. So avoiding that tax as long as possible really allows them to grow their portfolio much quicker.
Hey, Jeremy, can you, since you're a great example, and this was unexpected, of somebody who hadn't 1031 exchange, you own about 10, 15 properties or cash flowing units. Are you going to look at this in more detail now?
Absolutely. No, this sounds very interesting. Always wanting to grow into something larger, and I guess you can say consolidate. This looks like a great opportunity to do that. Now, can I just do this on my own with a title company, or is there special people that need to be involved? How does that work?
So the IRS regulates that you need a qualified intermediary, or QI. That's us. Beyond that, it's a highly unregulated industry. So you have to be very choosy when selecting a QI. So you want to find a company that's financially secure and very knowledgeable on the IRS code 1031. The last thing you want to do is a Google search. Again, it's a highly unregulated industry. So my mother could be your qualified intermediary, but I don't think that's a good idea. So you want to look for a company typically tied to a larger bank or a larger title company. And you want to look for a company that has excellent insurance. So in fact, Old Republic Exchange has the highest fidelity bond coverage in the business.
Wow. In like the state or country, or?
In the country, yes.
Wow.
Under $120 million fidelity bond coverage.
Hey, John, can you help me explain why that's important too? Because we're talking about the timing and all of that, and because it's kind of unregulated. Like, you're kind of you're like the babysitter for the money, so that the government lets you do what you need to do. John, in your history, have you run into people who have missed their deadlines and stuff?
Well, there's all kinds of scenarios, but to get to Tina's point and why it's so important, upon sale, the money that would normally possibly go in your pocket after taxes are taken out does not go into your pocket. It goes into the 1031 exchange entity. So they're basically babysitting your money. So you want them to be experienced, you want them to be viable, and have the necessary safeguards in place so that upon identifying and purchasing your replacement properties, the money is there to go ahead and do that. So that's why it's so important. And of course, why it's so important to search out an organization like Tina's that has a lot of experience to be able to consummate this transaction for you. Again, and most people don't wait 180 days. I'm sure we've all seen this rush, but they've identified properties possibly and can close within a reasonable period of time after the sale of their property. So we don't mean to think that everybody's rushing around on 179 days to get it done. But so there's been properties identified, and then the funds that are in the qualified 1031 entity then are used to purchase the new property. And just let me ask one question, because Tina can tell you, you can do this over and over again ad infinitum, which is just a great feature. So,
go ahead, Tina. Can you unpack that a little bit?
If I could just add two things to that. First of all, yes, the qualified intermediary, we're the necessary middleman, and we do control the funds. That's one of our critical functions, because the exchanger cannot have active or constructive receipt of the funds. Otherwise, their exchanger will be disqualified. So that was point number one. Point number two,
which is just that you can continue to do these 1031.
That's it. Thank you for refreshing my memory. It's a great estate planning tool as well. So yes, you can exchange as many times as you wish. And if you pass away, and your heirs will receive that on a step-up basis, so essentially tax-free at the point they receive the property. So if my mother were to pass away and I inherited her investment property, if I sold it, I would not be required to pay the capital gains tax. If I held on to that property for, let's say, 5 years, then I'm only going to be required to pay the capital gains on those 5 years. So fabulous estate planning tool.
Yeah, I'm going to jump in because I took years of estate planning in law school, and it was the most mind-numbing and difficult subject to deal with. But really early on in my life, and I've been kind of seeded into tax and things like that. But I think we can all agree, eventually, when you become obsessed with real estate, like most of us or most of my network is, you realize that the tax game, and it's a 50-year game, it's all of those pieces. And that's one of the reasons that we're doing events like this, even this podcast and all of these pieces, is the sooner you realize that you have to have the right intermediaries, the right friends, the right advisors, and then you're not making 100-day or 100-week decision. You're really, really, really pushing it out super far. And sadly, thinking about things like what would happen if you pass away, or your business partner, or things like that. And I'm sure Jeremy owning property, Jeff and John, you guys can kind of assimilate that. But when you take this stuff really seriously, you can kind of hedge your 10 and 20-year bet and reduce your risk, right? That's what we're going for. Anyone want to comment on that?
Yeah, you're absolutely right, Tejas. It's a great long-term planning vehicle. And investors, I think, for the most part, don't really think about it when they're buying properties. They're more focused on cash flow and those kinds of things. And you want to build that into your long-term planning. And I think Tina mentioned having a good CPA that can help you through that process is really important.
Yeah, definitely.
Yeah, it's just, I want to step in, Tina, if you could talk a little bit about the 1031 exchange really affects the seller and can't take constructive use of that money, but it doesn't affect the buyer at all. The buyer can do whatever he wants with that property. And so, it doesn't affect it, unless in case the buyer happens to be doing a 1031 exchange with the seller's property. So
You're correct. Yeah, it would not affect the buyer. We do require in the exchange agreement that both the buyer and seller sign it, just so the buyer is aware. That's required. But beyond that, again, unless they're doing a 1031 exchange, it has no effect on the buyer.
Okay, I'm going to pull up this screen real quick to just gab again about what we're doing here. This is the series that we are in the second part of, how to 1031 exchange in real estate in the Lehigh Valley. Obviously, Old Republic Exchange. This is the registration. There's a link here. And if you're watching this right now, the cool thing you can do is actually just zap that QR code, which is neat. And we're trying to fill it, have a little bit of fun, get enough folks in there. And this is Old Republic Exchange website, just to take a look. Tina has prepared a fabulous presentation, and also the folks at LVPE Fund, us, have a little bit of other information to kind of explain how and what and why we've taken so many steps and planning and pieces to make sure that we have all this together for the future. But it's a very exciting time. And I wanted to take a minute to say, although there is so many different kind of reverberations in the macroeconomics, here in the Lehigh Valley, we have kind of an insulated bubble. And more people are talking about it being an insulated bubble here in the Lehigh Valley. John and Jeff, can I lean on you guys? So Jeff, you've been doing loans for the past 20 some years. You've been a banker here for so many years. And now you have more loan volume than ever through COVID and things like that. Can you kind of comment on what's going to be happening in the next few months and years?
Yeah, I think COVID has been great for Lehigh Valley. The reality is people are moving here from New York, New Jersey, Maryland, Connecticut. I mean, they're fleeing the cities, unfortunately for the cities, but good for the Lehigh Valley. And we've already had a very low inventory of houses available on the market, and those are being sucked up quickly, as you well know, Tejas. And I think that's just going to continue. I don't see that trend reversing anytime soon. I think if anything, it's probably going to continue to accelerate. And new construction is hot. Rehabbing properties is hot. People are outbidding each other to grab properties. So this trend, I think, is going to be with the Valley for quite some time.
You got to go back to that for a second. They're outbidding each other on residential only, commercial. What's the activity like?
Mostly it's residential, but we see it on some 1 to 4 family properties. I haven't seen it in the commercial sector. I mean, commercial is very different right now because the retail and office space and restaurants are really in tough spot. But definitely on the single family homes and the 1 to 4 units, we're seeing it.
Awesome. And then, John, can you talk a little bit about your intel and what you've seen post-COVID, being the chief investment officer, and why my argument is that the Valley is very insulated?
Well, I think interesting enough, and thank goodness there's a robust amount of economic data for economic activity in the Lehigh Valley. So we're not in this vacuum where, we have to extrapolate Philadelphia data or New York data to try to get what's happening here. So our slowdown basically has been really only based on how we decided, or how the state decided to deal with the pandemic, and what procedures it put in place to open back up. And an interesting fact, that the economic activity for the month of July is referenced by retail sales, increased 5.7% in the Lehigh Valley after being down in June and in May. So there's a good example, and we see that in trucking pass-throughs and things that the Lehigh Valley Planning Commission looks at. So, the insulation, yes, everybody took this hit, but with regard to the strong economic activity, it was kind of like a punch, and then it came right back, and we're now seeing greater activity as referenced by actual data based on Lehigh Valley activity for the month of July. So hopefully we're well on our way to another good number in August, in September, and then throughout the end of the year, we'll look back at April, May, and June as that anomaly in terms of what the Valley has been able to produce.
Thank you. Jeremy, you got anything? We got to start wrapping it up.
No, I think, I have a bunch of questions in my head for Tina, but I think we're going to get into a lot of this.
Is that more if somebody wants to 1031?
Exactly. Yeah.
Perfect. Well, we have Friday, right?
Yeah. And, well, on that, if I can comment, you have a very large presentation prepared for us. We have a few people signed up for the Zoom so far. We want real estate agents, we want brokers, anybody and everybody to be a part of this, to understand what's happening, which is the fun part. And I think we found the best educator in the 1031 game with you. So I'm very happy and super excited. And
thank you.
Yeah, definitely. Jeremy, you want to wrap us up?
Sure. So if Tejas, do you want to put up the flyer again?
Yep.
4 to 5 o'clock this Friday, Tina will be going over the details and how to exchange real estate right here in the Lehigh Valley. Our friends at Lehigh Valley Private Equity Fund will be there also to assist with fielding any type of questions. Also going over any type of information, Lehigh Valley information on why this is such a great market. Kind of perfect timing. John just mentioned some data, all these data points that are coming out. It's just painting a great picture of why this market's so strong. But we are with the Real Estate Investor MBA. We're bringing this to you today, and we'll be highlighting and work with everybody on Friday. Please visit us at realestatemba.com. Also follow us on social media outlets. And thank you so much, Tina, Tejas, John, and Jeff for joining us today.
You're welcome.
My pleasure.